Hello and good morning friends, welcome to the CEC-UGC live lecture. Dear friends, as you know that we are carrying a series on financial accounting and so far we have conducted 12 sessions. This is the 13th session under the series financial accounting. Dear friends, from this session we would be going to talk on introduction to financial statement and under this very title we would be covering today understanding financial statements, preparing trading accounts, preparing manufacturing and trading accounts. And for this discussion, dear friends, we have once again with us in our studios Mr. MC Sharma. Mr. MC Sharma is Associate Professor in Department of Commerce, Shahid Bhagat Singh Evening College, University of Delhi. So without wasting any time, I would like to welcome our guest, Mr. MC Sharma, under whose able guidance we would be discussing on financial statements. Hello sir, welcome to the EduSec lecture.
Thank you. Welcome friends, audiences. I would like to remind you the accounting process. In the accounting process, the first step was recording the business transactions in journal. Second step, classifying the business transactions into ledger. And third step was the preparing trial balance. And the fourth and the most important step is preparing financial statements, or we could say reporting financial information. So, we as an accountant we need to prepare the financial statements which can be reported to all the interested parties, which are the owners, or in case of company, shareholders, then management, employees, government and different other parties, financiers, suppliers. So, the most important part is preparing financial statements and also understanding them, because if you go into any area, finance area, you want to become investor, you need to analyze the financial statements. So, first you must understand what are the financial statements and how they are prepared. Financial statements are organized summaries of detailed information about the operating results and financial position of the concern. Operating results means what the business has earned profit or have incurred any loss, and what is the financial position of the firm. And these statements are prepared usually at the end of accounting period. Financial statements include the two important statements. One is the income statement, or also called commonly known as profit and loss account, and other is the position statement or balance sheet. Income statement may have the three components. Two normally you find, trading account and profit and loss account, but another the manufacturing account. In case of the manufacturing enterprises or the companies, they need to prepare another account, manufacturing account. So, income statement may have the three components, manufacturing account, trading account and profit and loss account. But in case of companies, corporate organizations, you will find one more statement, that is cash flow statement, which is also a part of financial statements. If you see annual report of any company, so you will find there three important statements, that is income statement or profit and loss account, balance sheet and cash flow statement. But initially we are concerned here with only the two statements, income statement and balance sheet or position statement. The cash flow statement may be discussed later on as a separate unit lecture. Now, we start first from trading account. Trading account is the first part of income statement, and it is prepared for calculating the gross profit earned or gross loss incurred on account of trading activities of an enterprise. So, many of the enterprises are traders only, they buy the goods and they sell goods, incur some expenses in this process and they earn the profit. So, to calculate the gross profit, they need to prepare trading account. Now, the question arises, what is the need and importance? We all know that the immediate objective of a businessman is to calculate or to find the trading result, whether in the trading process he is earning profit or not. This trading result is shown in the form of the gross profit or gross loss by preparing trading account. In trading account, direct expenses are also recorded. So, if we want to know the details of the direct expenses, what are the different items on which the company has incurred as direct expense. So, detail we could find out from trading account. With the help of this trading account, we are also able to calculate cost of goods sold. Okay, whatever the goods has been sold by the firm, but by the cost to the firm. And this trading account also helps in calculating many ratios for the purpose of financial analysis. Just for example, if you want to calculate profitability ratio, one of the profitability ratio, that is gross profit ratio or gross margin. To calculate this ratio, you need information which is disclosed by trading account. That is, the ratio is gross profit and net sales, both information are available in trading account. If you want to know the efficiency, how the firm is managing its stock, so you need to calculate one ratio, that is called stock turnover ratio. To calculate stock turnover ratio, you need to find out average stock, which can be calculated with the help of opening stock and closing stock, which is given in trading account. And further, next it is compared with the sales or cost of goods sold. These both information are available in the trading account, are disclosed by trading account. So, we see that the trading account is also one of the important account or statement which helps the firm to find out gross profit or gross loss, to find the details of direct expenses, to calculate the cost of goods sold, and to calculate few ratios, financial ratios to for the purpose of analyzing financial statements. Now, we see the format of trading account. As we know that this is the account, so it means it has the two sides, debit and credit. Trading account is a nominal account. So, as a nominal account, all expenses are debited to this account and all incomes are credited. Now, when we see, there is a standard format which is normally used. The first item on the debit side is opening stock. As far as the opening stock is concerned, it may be of three types in case of manufacturing concern. That is raw material, that is work in progress or semi finished goods, and finished goods. In case of trading concern, there will be only one type of stock, that will be goods or finished goods. So, all the three types of stock which are given any type of opening stock. Opening stock is the stock at the beginning of the year, that will be shown under on this side debit. Then to purchases, purchases of goods. So, gross purchases are recorded here, then the purchase returns are deducted to find out the net purchases. Then expenses on purchase of goods and manufacturing expenses, other direct expenses, and if in the account there will be any balancing figure on the debit side, that will be gross profit. On the credit side, we record sale of goods, less sales return, and then closing stock of goods. Closing stock is the unsold goods at the end of the accounting year. And if there is any balancing figure on the right side, so that is known or called the gross loss, and this gross profit or gross loss, any of the both which is disclosed by this trading account, shall be transferred to profit and loss account. Now, we would like to discuss all these items in detail, because understanding the nature of expenses, which is included, which is not included, is very important. So, first I explained you this opening stock, raw material. Raw material is basically the material which is purchased by a firm or the manufacturing enterprise, particularly for the purpose of reprocess or manufacturing some product. Work in progress is or semi finished goods. In manufacturing factory, if you visit sometimes, you will find the some goods have been put into the process of production, but has not been produced. So, this is called as work in progress or work in process or semi-finished goods. All manufacturing companies you will find this item. Finished goods are the goods which has been produced. So, there are the three types of opening stock. Values are given, so there is no any point. Then net purchases. Net purchases means purchases less purchase return, but few points are very important. The first point is cash and credit purchase. So, we have to record both the purchases, whether they have been purchased on cash basis or they have been purchased on credit basis. Then purchase of asset. Purchase of asset is not the goods, so it should not be shown in the trading account. If by error, by mistake, purchase of asset has been recorded in the purchase account, then it should be deducted from purchases while preparing final accounts. Then drawings of goods. If some goods has been taken over by the proprietor for his personal use, and so it is also not it means available for resale. So, if this is given in adjustment, it will be deducted from purchases. Now, the goods in transit. Goods in transit is the goods which is on the way. There may be some goods which the company has purchased, but has not been received by it in its godown on the date when we are preparing financial statement. So, how to treat this goods in transit? So, first point regarding this is that whether goods purchased has been recorded as purchased or not. If it has not been recorded, then there is no the need to make any adjustment. If the goods has purchased, but it is on the way, has been recorded as purchases, then it should be deducted from purchases. Next is goods received on consignment basis. So, I would like to explain the meaning of this goods received on consignment basis. Goods received on consignment basis is the goods which has been received from suppliers or some owner of the goods for sale on the condition that if the goods will be sold, only then the payment will be made. So, it is not the purchase of the person or the firm. So, if it has been included by mistake in the purchases, then it should not be included, it should be deducted from that. Now, we would like to discuss few expenses on purchase of goods. Whenever goods are purchased, so many times the firm has to pay freight, carriage, cartage, and then custom duty if the goods has been import duty or custom duty imported. Then octroi. Octroi is entry tax which is paid while when the goods enters in a city. It is basically levied by the local authorities, municipal committee or corporation. Then landing and clearing charges. When the goods has been imported, then to get the goods cleared from the custom department, some expenses are to be incurred, and sometimes the job is given to the clearing agent, and we need to pay him reimbursement of expenses and his fee. So, that also expense on purchase of goods. Then dock dues or charges. Dock dues are basically paid when to the shipping company through which the goods has been received. So, the port charges or dock due charges are to be on expenses on purchase. Then manufacturing expenses. If we are preparing only trading account, not preparing manufacturing account separately, then manufacturing expenses are also recorded in this account. The one item is wages or labor, or we also call it productive wages, and factory wages, manufacturing wages, process wages. It may be called by the different names, but the focus is that this is paid to the employees who are involved in manufacturing goods or processing goods. So, it is known as the direct expenses considered and shown in the debit side of trading account. Then coal, gas, water, In factories, many times the coal and different type of gas and water may be required for in manufacturing process. So, it will be also debited to the trading account. Fuel and power. Power is most important to run the plant and machinery, and when power is not available, so companies use the generators and the fuel is to be used, diesel or any other gas or based or any other fuel. So, this is to be being an expense on manufacturing, it is also to be shown on the debit side of trading account. Then factory expenses. As we know that the goods which are manufactured in the factory or workshop. So, the all expenses relating to factory are also to be shown on the debit side of trading account. It may be factory rent, factory rates. Factory rates means basically the local tax on factory building, then taxes on the premises, that the house tax and property tax, then insurance premium of factory building, plant and machinery. If the factory building, plant and machinery have been insured, then insurance premium paid for that purpose will also be the part of expense of to be shown in trading account. Then factory lighting and electricity. Factory needs the lighting and electricity. So, this is also the part. Then consumable stores. Consumable stores in a factory may be some engine oil, lubricants oil, some cotton waste, some spare parts which are consumable in the machinery. Then packing charges to pack the goods manufactured to make it saleable. There are many products which may be in the liquid, just like the example the oils, whether it is edible oil or industrial oil, they cannot be directly used. So, for the purpose of make it saleable, the companies have the different size of packing, maybe 200 ml, 500 ml, 1000 ml, like that. Then accordingly, this packing charges to pack the manufactured goods to make it saleable is also the part of factory expenses or manufacturing expenses. Then royalty. Royalty is an amount paid to a person or a firm for using their assets like mines, oil wells, tea gardens, etc. Royalty is also paid in case of the copyrights and some patent rights. So, now the question arises whether this royalty is the part of direct expenses or indirect expenses. It depends upon the agreement with the firm. When the royalty is paid on the basis of goods manufactured, then it is considered direct expenses and debited to trading account. When royalty is paid on the basis of sales, then it should be debited to profit and loss account, because it is considered indirect expenses. Now, the items which are shown on the credit side of trading account. First item is net sales, that is sales less sales return. In this item, following points are important. One is cash and credit sale. It does not matter whether the goods has been sold on cash basis or credit basis, both are the sales and it will be shown on the credit side of trading account. Then sale of old asset. Sale of old assets is not considered the ordinary sale in sale in ordinary course of business. So, it should not be included. Then consignment sales, if the goods has been sold on consignment basis, then it is not the actual sale, but it is shown separately goods sent on consignment account, and we may deal the consignment account separately. Separate consignment account is to be prepared to calculate the profit or loss on goods sent on consignment basis. There may be some goods which is sold on approval basis and the confirmation is pending. So, when goods is sold approval basis, it means if the customer would like the goods, then he will keep it, otherwise he will return. So, if on the last date of financial year or accounting year, when we are preparing financial statements, confirmation is pending, it means it is not the confirmed sale. So, according to revenue recognition accounting principle, the firm has not got the claim, actionable claim against such goods. So, therefore, it is not the part of sale. So, it should not be included. If it already included, then it should be deducted from the sales. Next is goods sold on hire purchase basis. Goods sold on hire purchase basis is a separate type of the business transaction, in which the goods are sold to the customer on installment basis, but the ownership of the goods is transferred only when the last installment is paid. If you buy any car and get it financed from bank and any financial institution, so if you read that agreement, you will find it is on hire purchase basis, and it is the reason that sometimes you get a news in newspaper or on media that the financing company has taken away the car from the customer for non-payment of installment, because the financing company is ownership has not been transferred to the customer, because all installments has not been paid. So, the knowledge helps the customers while buying the goods on hire purchase basis. Another item which we show on the credit side of trading account, that is closing stock. Closing stock is the goods, unsold goods at the end of the year. Normally, it is the finished goods, but in case of manufacturing concerns, it may be raw material and semi-finished goods also. So, it is shown on the credit side of trading account. Many times the closing stock is given in the adjustments in additional information next to trial balance. So, this closing stock, but if the closing stock is already given in trial balance, then it is not to be shown separately. In that case, you will find the not purchases, you will find adjusted purchases. So, it means the closing stock has already been adjusted in the purchases. So, it is important to remember this point, whether closing stock is given in trial balance or outside the trial balance. Sometimes when closing stock is given, so the cost price and market price both are given. We initially discussed one accounting principle, that is the conservative principle or the prudence principle. According to conservative principle or prudence principle, stock is valued at cost or market price, whichever is less or whichever is lower. So, if the market price is lower than the cost price, then the closing stock should be shown at the market price. So, here what do we mean by the cost? Normally, the cost of the goods includes purchase price plus direct expenses incurred on purchase of goods or on manufacturing. So, we discussed all the items which are shown in this trading account. Now, we like to explain some accounting equations, some equations which are based on trading account, which help to calculate some necessary information. First is gross profit. What do we mean by gross profit? If we see the equation, it is given net sales minus cost of goods sold. It means we can define the gross profit as the excess of sales over cost of goods sold. So, when goods is sold at more than its cost, so the difference is the gross profit. So, this is one way to calculate gross profit, and another way is to follow the trading account format. In trading account format, you see this on the credit side sales and closing stock. So, we can find out net sales, that is sales minus sales return plus closing stock minus all the items which are shown on the debit side, that is opening stock, net purchases, expenses on purchase of goods, manufacturing expenses, other direct expenses. So, in this way also on the the format is explaining that part, we can find out the gross profit. So, the gross profit can be calculated if the cost of goods sold is already given, or not given, then we can calculate the cost of goods sold, and the equation for calculating cost of goods sold is given in the presentation in the last, cost of goods sold equal to opening stock plus net purchases plus direct expenses minus closing stock. Cost of goods sold can also be calculated as the sales minus gross profit if gross profit and sales both are given. So, it depends upon the situation in the question which informations are given and what we need to find out. If you are given cost of goods sold and gross profit both, then you can calculate the sales also. The sales equal to cost of goods sold plus gross profit. One thing should be clear further, if this gross profit figure is in minus, then it is known as gross loss. So, sometimes in examination when you attempt, you may find some short answer questions to calculate cost of goods sold or to calculate closing stock. I have given here showing you this presentation, the question. Illustration 1 which is here, opening stock, sales, freight incurred, sales return, profit on sales, gross profit on sales, net loss for the year, purchases, purchase return, and we need to calculate cost of goods sold and closing stock. So, cost of goods sold, the formula one is net sales minus gross profit, because both are given. Net sales is sales minus sales return. So, it is 75,000 minus 5,000, 70,000, gross profit 30,000. So, CEC-UGC is 40,000. Closing stock, on the basis of this another equation which we know for CEC-UGC, we could find out the cost of goods sold also. This equation we show here, opening stock plus net purchases plus direct expenses minus closing stock equal to CEC-UGC. So, if CEC-UGC you already know, opening stock already know, net purchases, direct expenses, then closing stock will be balancing figure. You can prepare an algebraic equation and it may be the value of some x which you assume the closing stock. So, this has been calculated here in this part. So, another illustration is given for you, that some information given, sales, purchases, gross profit, opening stock, returns inward, returns outward and carries inward. And if we need to calculate the closing stock, so first we should calculate CEC-UGC, that is sales minus gross profit. Then again by applying the same equation, you can calculate the closing stock. So, if you remember these equations, you could find out the missing figures from the questions and you could note down this, the two solutions are given and this is the answer to solution A part and this is the solution B part. And today I have given also the few questions. This is test your knowledge part and this is one is question on the screen and another question on the screen and the answers are also given. So, you can attempt whether you have understood this concept or not. If you have any doubt, you could inform us and mail us. So, thanks for this session, and next session we shall continue the trading account and manufacturing account parts, further information. Thank you. Welcome friends to this second session of today's lecture. We were discussing the trading account and we discussed few problems, short answer problems based on the trading account. Now, we need to know if the information is given, then how to prepare a trading account and find gross profit or gross loss, whatever the case may be. So, to strengthen your knowledge, because this is accounting is a critical subject, we need to understand few problems. So, I am putting one problem, this one more illustration of this lecture. In this lecture, this illustration information is given that on 1st April 2015, Messrs. Ramchandra had a stock of goods valued at rupees 5,600. During the year, the following transactions took place. So, they have given information for the year: sales, purchases, freight inwards. Freight inwards is basically the freight paid on the purchase of goods, coal, gas and water, factory insurance, excise duty, carriage inward. Carriage inward is again on the carriage charges paid on purchase of goods. Import duty is paid on import of goods. Sales returns, factory lighting, purchase returns, clearing charges. So, if we see, we check all these expenses, all expenses belongs to the trading account part, the direct expenses. So, we will show all the expenses and information in the trading account. Additional information is given. The closing stock of goods on March 31st, 2016 is 12,000. So, now we need to put this information. So, we start this trading account, heading at the top, name of the firm, then trading account, then for the period like for the year ending 31st March 2015, it should be 16, not 15. So, credit side, the two items are to be recorded, the sales and less sales return. So, sales is given 2,25,000 and sales return is given 2,500. So, 2,25,000 less 2,500. So, net sales is 2,25,500. Closing stock is given, you see in the last end of the question, 12,000. So, it is 12,000. So, credit side is complete. Now, on the debit side, normally we follow a sequence. The first is opening stock, then net purchases, then all direct expenses. Opening stock given 5,600, purchase given 1,075,000 and purchase return 2,250. So, to purchases are recorded within the particulars column, and we show here also the less purchase return minus. So, the net figure 1,72,750 is net purchases, which we have shown on the amount column. Then all the expenses which I told you that are related to the purchase of goods, to carriage inward, freight inwards, import duty, coal, gas and water, and factory lighting, factory insurance, excise duty. Excise duty is paid on manufacturing goods and at the point of production. So, it is also related to the manufacturing or purchasing, and clearing charges. And so, the gross profit, the credit side is more than the debit side. So, the balancing figure is on the debit side. So, it will write to gross profit carried down or transfer to trading, transfer to profit and loss account. Now, you could test your knowledge. This question is on the screen and answer is also given at the end of the question. So, you could attempt it and find the answer, and in case of doubts you could mail and inform us. Now, we will talk of manufacturing account. As earlier I told you that the financial statements may have the three parts: manufacturing account, trading account and profit and loss account. As far as the manufacturing concerns are concerned, calculation of cost of production is very important for them. One reason for that is pricing. accounting is an information system and it provides useful information to the management also. Management has to determine the price of a product. Normally, the pricing policies of the organizations are cost plus profit margin. Like a company may decide that they would fix the price, so they can earn 25% profit on cost. So, it means the cost of production first should be known to the management, only then price may be determined. So, to calculate the cost of goods produced or cost of production, we need to prepare manufacturing account. So, manufacturing account is to be prepared by those enterprises which are involved in production of goods. So, what may be their important parts relating to manufacturing? Purchase of raw materials, incurring direct labor or direct wages or manufacturing wages, and other direct costs which are required converting raw material into finished goods. So, we could ascertain cost of goods produced with the help of manufacturing account. Now, the expenses, normally we say that in trading account we record only direct expenses, but in case of manufacturing account, indirect expenses relating to factory and manufacturing are also recorded, because they are concerned with the production, concerned with manufacturing or factory. So, all are to be recorded in the manufacturing account. And the balancing figure of this account, which is normally on the right side of manufacturing account, is called cost of goods produced or cost of production, and which is transferred to trading account. Now, we see the format. Name of the firm at the top, then manufacturing account for the period ending 31st March 2000, whatever it is. On debit side, we have the opening stock of raw material, work in progress. Then purchases of raw material net. Net purchase of raw material means purchase of raw material less purchase return of raw material. Then carriage inwards. Carriage inwards means carriage charges paid on purchase of raw material. Then direct wages or direct labor. As I told you, these are also called manufacturing wages, process wages, factory wages, whatever you call it. So, these employees, those employees who are directly involved in production process, wages paid, whether you call it the salary or not, in this technical term they are direct wages, particularly in cost accounting. It does not make any difference whether you call it wages or salary. It is to be determined on the basis of their relationship with the production. If they are directly related with the production, then it will be the part of direct wages. Then factory expenses, we discussed the factory expenses, that is the factory rent, factory rates, insurance, factory lighting. So, all factory expenses. Then manufacturing expenses. Manufacturing expenses relating to manufacturing of goods, like the fuel and power. So, all these expenses which we could relate with manufacturing or factory should be recorded in manufacturing account. Then depreciation on factory building and depreciation on plant and machinery, it is also to be recorded. So, we will note the one difference point, that in trading account we are not recording depreciation. In trading account we are recording only expenses on purchase of goods and manufacturing. While when we are preparing the manufacturing account, we are also recording here depreciation on factory building and depreciation on plant and machinery. On the credit side, the three items are given. The first item is sale of scrap. What is this scrap? Scrap is basically the residue of material left in the manufacturing process. Just for example, in case of a timber furniture. So, there may be some timber pieces left after manufacturing the furniture. So, these are the scrap and these are sold by the firm or the company. So, basically they are reducing the cost of material or cost of goods produced. So, we need to credit it to the manufacturing account. If you visit any factory, particularly sheet metal factory, so you will find the residue of the sheets out of the left after the production. So, the sale of the scrap will reduce the cost. So, we record it here. Then closing stock. Closing stock of raw material and work in progress. One point you will note that we are recording here only the opening and closing stock of raw material and work in progress. We are not recording here the opening and closing stock of finished goods. The reason is that the finished goods is the part of trading account. So, it cannot be shown in the manufacturing account. So, after writing all these items, the balancing figure on the right side will be cost of goods produced and which is transferred to trading account. But if you go through some books, you may find the alternate format also, only the few items are changed. This format I am showing you on the screen. Only the items shown in the red ink, this is showing to raw materials consumed. The equation for raw material consumed or formula is opening stock of raw material plus net purchases of raw material minus closing stock of raw material. So, this information, as we know accounting is an information system. So, this must provide the information which can be readily used. So, if we have a raw material consumed figure, it can be directly used to have some conclusions or some interpretation or some more calculation. And as opening stock of raw material and closing stock of raw material has been adjusted to calculate raw material purchase consumed. So, it is not shown with the opening stock and closing stock separately. So, otherwise all other items are the same. So, it depends upon how we want to present the information. Accordingly, we shall follow the format of manufacturing account. Again, I am giving here the trading account format. Why? Because when we are preparing a manufacturing account, then the format of trading account will be different. All those items which have already been shown in manufacturing account, they cannot be presented again in the trading account. So, we are finding here this format of trading account. On the credit side, net sales. Net sales is sales less sales return, same. Then by closing stock, here we shall record only the closing stock of finished goods. Then on the debit side, opening stock of finished goods, and then to cost of goods produced transferred from manufacturing account. The figure will be taken from here, the cost of goods produced on the right side. So, it will come on the debit side of trading account. Then purchases of finished goods net. Sometimes a firm may be manufacturing goods in its factory and also purchasing from the market. So, when a company is also purchasing finished goods from the market, then it could be recorded here, it will be recorded here. Then carries inverts on purchase of finished goods. So, if the finished goods has been purchased by the firm and any expense has been incurred on purchase of such goods, then it will be shown on this debit side. So, we need to remember that when we are preparing manufacturing account, the format of the trading account will be a little different, modified. Now, we would like to discuss the one example or illustration. Some information has been given in this presentation. On the left side, stock of raw materials on 1st April 2015, 21,000. Stock of finished goods 23,000, on it is again on 1st April 2014. Then work in progress 32,000 It is also on 1st April 2014, the 15 is typing error. Then purchases raw materials, that is 1,20,000, manufacturing wages 95,300, fuel and power 10,200, depreciation on plant, sale of finished goods. Then right side, the stock of raw materials, this is on 31st March, that is closing. Stock of finished goods, again closing, and work in progress closing. So, then sale of scrap, factory rent and rates, indirect wages, carriage inward. And we read at the top, from the following information prepare a manufacturing account showing raw materials consumed and trading account. So, they are specifically asking to show raw material consumed. It means we need to follow this format of trading account. Now, we see how to prepare the manufacturing account. On left side, first of all, opening stock. Here we will record opening stock of work in progress only, because the opening stock of raw material has been used to calculate raw materials consumed. So, this then net purchase of raw material, then closing stock of raw material minus deducted, and we could find the net figure, that is 96,000. Now, carriage inward, manufacturing wages, fuel and power, factory rents and rates, indirect wages. All these items are related to the factory or manufacturing, and then next the depreciation on plant and machinery. So, all these items are related to the factory or manufacturing. So, we have recorded here. There is although no any other item which of expense. Then on the credit side, sales of scrap is first one, that 10,000. Then closing stock, work in progress. We have not recorded here the opening stock and closing stock of finished goods, because it will be shown in the trading account. So, we after solving this question, we found that the total on debit side is 2,90,000, while the total on credit side items, sale of scrap and closing stock of work in progress is only 44,000. So, the 2,90,000 minus 44,000, the balancing figure is 2,46,000. So, this is the cost of goods produced, and which is to be transferred to the trading account. Now, we will see the trading account for this question. Trading account for the year ending 31st March 2015. I have not mentioned here the name of the firm. In name of the firm not given in the question. If it is given in the question, then you need to write at the top in both the format, manufacturing account as well as trading account. So, in trading account we have shown net sales on the credit side 2,71,200, then closing stock of finished goods 43,000. On the debit side, opening stock of finished goods 23,000, the cost of goods produced, which we have calculated by preparing this account, manufacturing account. On the right side, balancing figure 2,46,000. So, this figure is here put, and then we could find out the gross profit, that is 45,200. So, when we see this manufacturing account and trading account, we could easily understand the importance of these accounts. Manufacturing account will provide us information on raw material consumed. If the management wants to know for the purpose of controlling material cost every quarter or every half year, then we can prepare this manufacturing account every quarter and every half year and calculate the raw material consumed, that with the help of opening stock, purchases and closing stock of raw material. And by preparing this account, we can find out the cost of goods produced. If we are given the total number of units produced, then we can find out the cost of production per unit also. If suppose in this case the number of units produced are 24,600, then we could find out the cost of production per unit, cost of goods produced divided by units produced. So, we will find out the cost of production per unit is rupees 10, and then this information will help the marketing manager or the management to determine the selling price of the goods. If the firm follows the policy of 50% profit on the cost of production, so here we calculated the rupees 10 per unit the cost of production of one unit, and so 50% of rupees 10 is 5. So, the total cost is rupees 15. So, rupees 15 may be decided as the selling price by the firm. And if in the again the same policy, the 15 rupees per unit. So, firm wants to net price of 15 rupees and it want to give the discount to its dealers and the sellers at 25%. Then again the price is to be adjusted. So, this manufacturing account will help. If we prepare quarterly, we could review our pricing policy quarterly. So, if we want to review our pricing policy, we must prepare the manufacturing account and see whether the prices determined by us are the true or not. If we see this trading account, we have found out here the gross profit. Gross profit earned by the firm is 45,200. So, if a firm is earning the gross profit and gross margin, so it is basically the excess of selling price over the cost of goods sold. And if I want to know the cost of goods sold, we could find out with the help of this trading account, either the net sales minus the gross profit, cost of goods sold, or opening stock plus cost of goods produced minus closing stock of finished goods, we could find out the COGS. Here the COGS or cost of goods sold 2,71,200 minus 45,000. So, it is basically 2,16,000. 2,26,000 is the cost of goods sold. So, now I am putting one question for testing your knowledge. I can explain these items for you. The raw material is opening stock of raw material and 1st April, then finished goods also, then work in progress. In work in progress, remember to note that this 1st April 2014 it should be taken not as 15, 33,000, and then purchases, raw material, then manufacturing wages, fuel and power, depreciation on plant, sale of finished goods, it will be part of trading account, stock of raw material will come in manufacturing account, stock of finished goods it will be shown in the trading account, work in progress, manufacturing account, sale of scrap, credit side of manufacturing account, factory rent and rates, debit side of manufacturing account, indirect wages, debit side of manufacturing account, carriage inward. If carriage inward no purchase of finished goods, so it will come in the manufacturing account. So, this question you could attempt to calculate and check your answers. These are answers given, raw material consumed for this problem, cost of goods produced and gross profit. So, we would conclude and revise in nutshell the today's lecture what we have done. Today we understood what are the financial statements. Financial statements are also known as final accounts. Final accounts are prepared at the end of accounting year or accounting period. to calculate profits earned by the firm or the losses incurred. So, financial statements show operating results, and that is the income of the firm and the financial position of that is balance sheet. So, there are two important statements, financial statements, income statement, that is also known as the profit and loss account, and balance sheet. And in income statement, which we have discussed today, a part of that, there may be the three components. The first component is the manufacturing account, but it is only in case of the manufacturing enterprises. The second component is the trading account. It is to be prepared by all the firm, whether they are trading firms or whether they are manufacturing firms. And the profit and loss account, this profit and loss account is also prepared by all the firms, trading or manufacturing. And so, we have discussed today manufacturing account and trading account. And in the next session, next lecture, we shall discuss the profit and loss account, that what we understand the profit and loss account and how it should be prepared, what is the importance of the profit and loss account, how it is useful information it provides to the different information users, owners and management. So, we conclude today on this part.
With this note, thank you, sir. Thank you so very much for giving us a productive session once again. And dear friends, for accessing this lecture the number of times you wanted, very soon we are going to upload this lecture on YouTube for you. And afterwards, if you find any problem or if you have any question to be asked or any kind of suggestion you want to give to us, then you can mail us at info.cc@nic.in. We would be meeting again very soon and would be discussing on another aspects of financial statements. Till then, take care. Goodbye. Thank you, sir. Thank you so very much.